Another good trade on the Aussie US dollar today, December 15th, 2011, and price comes down on the 4-hour chart. Watch the higher time frames. That's where it all starts, from the higher time frames, guys. Always watch those. Resistance, breaks it, becomes support, and look at this here. Support, 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 and look at this candle action. Candles. Watch candles. That's rejection and a big move back up here. Almost a hammer. I know it's kind of a long wick on here, but it was a good looking rejection. Now here's the other thing. The market environment, bullish today, following some pretty negative stock market action the last few days. Today comes in, the futures are bullish. Everything's bullish, heading up, and so you want to be looking for the possibility of a rally, or at least that would put you in alignment with the sentiment of the day. And when it hits that level down there, what happens is this: the 15-minute chart, you look down at it, price is going lower, but look what the MACD is doing. It's going higher. The corresponding lows, this one here and this one here, the lows on the price are going lower, but the corresponding lows on the MACD are going higher. Okay. So what we want to do is we want to buy a 62 to 79% Fibonacci retracement. Well, our stop's going to go down here at I don't know, 98.58 to put it just below here, and as you can see, it comes along and price dips right into our level really nicely there and takes off. I will say right here that, you know what, it's very possible that you could have missed this trade. It actually came down as low as 75. If you're trying to buy it at 78, you should have no problem. That should be a fill, okay? Because 3 pip spread, I mean, you should be getting 3 pip spreads on your, or less, on your trading platform. So buying it at 78, and you got your classic A out of it, okay, which is 20 pips on the first half of your position and 40 pips on the second half, with the volatility levels the way that they're at right now. Like the Aussie US dollar has an average daily range of, right now it is a 5-day average of 184 pips. That's pretty big. Okay, so you've got 15% is 27.6, say 28 pips. So you definitely want to make it a 20 pip risk, and you want a 20 and at least a 40 out of it because of the ADR. Now, as it goes up, get your 20 pips, get your risk out of the trade. You can take it the other half off at 40 pips, or because of the environment, this is when you start to learn to read the conditions. You might want to hang on to this trade a little bit longer, and where you want to look to take profits, go to your hourly chart. It's a very useful chart. I talked about this in the course. Use the hourly chart for additional profits. Look at this level here. That would be pretty good, wouldn't it? And price actually did spike right up into it. Okay, so that was at I don't know, 99, let's call it 80, 86, something like that, 99.86, yeah. And that was as high as it went. I mean, that's pretty good. That's pretty cool when that happens. Doesn't always happen that nicely, but when it does, it's perfect. So you got from, that's over 100 pips, from 78 up to 86. Okay, that's a big move with just a 20 pip risk. So you can see that these short-term trading strategies, you can get some good moves out of them. Okay. So that trade was on the Aussie US dollar pair. I'll just move this ahead. You can see how it unfolded. It just kept going up and up. Get your risk out of the trade down in here when you get your 20 pips. And, you're at 78. Take your profits at 98, which should be right into here, just below 99 in here. So your stop was never in danger. Another good place to take profit is up in here. I mean, you could have taken this as a 20 and a 40 on your position. And up in here we had actually this was also 162% Fibonacci extension from this low to this high. Another good reason to take profits up at this 80, 86 area. And after that, that's, down it came. And this is where we're at currently right now as I am recording this right here. Okay? Nice play. That's where you got to just take your profits. Don't fool around with it. Great trade. MACD, positive divergence, Aussie US dollar pair, all set up because why? Price was at support with candle action on the 4-hour chart. Okay, December the 15th, 2011.